Hello and welcome back to my channel. Today I would like to go over what is called a amortization schedule, and it's something that pertains to my mortgage, and I wrote down the definition. And what it is a schedule, a table that lists each regular payment on a mortgage over time. A portion of each payment is applied toward the principal balance and the interest. And what this schedule does is it details how much will go toward each component of your mortgage payment. And here is my copy that I printed a while ago, about 3 years ago. And at that time, my current loan amount, so this is before my refinance, was $233,040 with 49 cents with the interest rate of 3.5%. I had 337 months to go, and my payment amount, and that's minus without the escrow, so that's without the property taxes and without the homeowners insurance. My monthly payment would be $1,088.93. And so I started recording how much I put towards that $1,088.93. And one of my first entries was on, let's see, well, I'll go down to this one. I started doing that December 28th of 2018 is when I recorded this entry. And so at that starting balance was going to be $232,631.26. And if I would have just made that regular $1,088.93 payment, then it's telling me, and you can see in there, you can see my handwriting versus their typed version. If I would just made that regular monthly payment, you can see under the principal payment, $410.42 would have gone towards the principal. And look how much goes towards the interest, $678.51 out of my $1,033. So let's add that up here. Okay, so we have $410.42. Let's see. And then we're going to add the $678.51, see what we get. So we get the $1,088.93. And so if you see my handwriting here, it looks like I paid more than the $1,088.93 at that time. So I paid $11, about $10 and some change above that $410. And then, so whatever I paid over that $1,088.93 was applied towards the principal. So the principal ended up getting, let's see, so we're gonna do 421.05 minus 410.42. So I ended up making an additional $10.63 at that time. So it took away a little from what was going to go towards the interest, which was just 3 pennies here. So if I would have just made the 1088, what was it? 1088.93. The interest would have gotten $678.51. But since I made a little bit more, you know, it chipped away what they were getting towards the interest. And so I'll skip down to one of my bigger payments. It looks like this one here may have been on November 27th, 2019. My starting balance would have been $228,050.20. But since I was, you know, putting a little bit, even just a little bit, like I said, $10.63 look at, it's supposed to be a starting balance of $228,050 with 20 cents. And because I was putting a little bit extra, you know, months before, it was $226,376. And so whatever I paid, the principal was only supposed to get $423.78, but it ended up getting, let's see, I want to make sure I'm okay. It would end up getting It ended up getting $676.69, and then the principal interest would have just gotten $665.15, but it got about $2 and some change less. So, but just look how much this is. What just gives me the principal of $423 and $665 towards your interest. So that whoever you're getting the loan from, they're getting like hundreds of thousands of dollars from you if you just pay the you know, that regular payment. So that's why, you know, in my journey, I'm trying to find every little bit of cash I can to just chip away so that more is going towards my principal and less is going towards my interest, because that's why it's important that I refinance, because, you know, it's like I'm making the payments, but it's like you're getting all my money. I want this principal to go down. And so eventually we're going to go into year, when I stop recording it, maybe I need to fill in one last entry, but I haven't done that yet. But we're going to go down to December 29th of 2020, when the payment process, the starting balance was, if I was just to make that regular old $1088.93, would be $222,443 with 56 cents. But instead, look at that, because I was adding, you know, paying a little bit more, it's down to $218,684 with 91 cents. So the principal, instead of getting the $440.14, they got the $449.79. And instead of the interest getting $648.79, they got about $9 less, which is $639.14. So let's subtract the $449.79 from $639.14. So $639.14 minus $449.79 equals $189.35 difference. But still, I don't want any of that going towards my towards interest. I want it all going towards my principal. So that's where I'm trying to do my best to get. So in month 26 here, you can see in the beginning it said my term. So these are 337 months of payments I would have to. See, I'm in month 26 when I started recording on my amortization schedule. So $218,684 is my last recorded balance, but look where $218,000. So it would have been at month 34. So what I'm about, let's see, is that 8 months ahead? Just by making extra payments here and there, above and beyond that $1,088.93. You go 1, 2, 3, 4, 5, 6, 7, 8. 8 months ahead. And just chipping away. You can see the more going towards the principal and less is going towards that interest. Now I'll go all the way to the last page. Like I said, the term was 337 months. My starting balance would be $38.60. More of it would have gone towards my principal at that time, $1088.82, and interest would only get 11 cents. We're trying to make it 11 cents right now. But yeah, we got months to go, and with this refinance, once I get the new schedule, I'll find a way to print it. I don't have a printer at this time, so I may have to just purchase one so I can print the new schedule, and that way I'll just start recording it. I just drew lines here just to, it's nice to have a visual of how much less your starting balance is, and how much more is going towards your principal, and how much less is going towards your interest. But yes, I just wanted to share with you. I had got a comment on one of my other videos about the amortization schedule, and I thought I should post it because I do have one, and I have been logging, you know, what I've paid, and I am aware of like how much when I make that payment, how much will be going towards the principal, and how much will be going towards my interest. So if you do have a mortgage and if you don't have a schedule, it's a good thing to look at. It's very eye-opening, the difference. And you can see how much the cumulative principal and interest. So over time, so I'm making all these monthly payments. I'm 26 months into, and only $11,037.06 is going towards my actual principal. And look how much interest has gotten over this time, $17,275.12. So look how much, when you take out of a loan, that they're earning on interest alone. They're earning more than what you're able to, you know, take away from the starting balance. Yeah, so guys, let's get on this journey, and let's find every little way we can to get our mortgage paid off sooner than, you know, your fixed term year. I don't know if you have a fixed loan, but I have a fixed loan, so the interest rate doesn't change. When I got to this refinance, of course it changed. I qualified for a lower interest rate of 2.75, and then my monthly currently, well, prior was about $1,600, and I'll round it up to $1,614. And after the refinance, it would be $1,350 or $51 if you want to round up. But yes, I'm gonna go ahead and, you know, once I do have access to that schedule, I'll go ahead and print a new one, and I'll start recording because it's very interesting. I keep this and I log it monthly. I haven't done January because I was going through the refinance. I just completely forgot to log it, but I'll go ahead and do that. And if you have any questions, please leave a comment. And if I can answer it to the best of my ability, I will do so. I'm not a professional at this, but I'm learning. It's a interesting journey, and not most people know about that until, you know, you do own a home. But once again, the amortization mortgage schedule is just it shows you what portion of your payment is going to be applied towards the principal balance and the interest. It doesn't show what's going to be going towards your homeowners insurance or what is going to go towards your property taxes, because that is something that is ever changing. And even with my monthly, you know, with my prior monthly payment of $1,614, you know, at one time it was higher, and then I guess probably because I was making extra payments, I got a lower monthly payment. And so if I continue to make extra payments towards my mortgage or towards that loan, eventually that $1,350 will get lower as well. And that's also dependent upon property taxes, if they go higher, or if my homeowners insurance, if that raises up higher. But in the future, I think I'm going to look in to see if I can get a lower monthly find another insurance company where my homeowners insurance will be lower than what it is now. But that's another process that I'll undertake later on down the line. And once again, I thank you for watching. Bye-bye.